I want to get right to our next guest. Clinton Wilkins is with the Clinton Wilkins mortgage team, Centon Home Lenders in Dartmouth, because we have some big news to talk about today involving mortgages. First of all, hi there, Clinton. Hope you're well.
Thanks for having me, Rob. How's your day going?
It goes well. I have to get your reaction to this. This has been posted by the Globe and Mail now within the last hour. This is a very significant news story here. OFSI is the Office of the Superintendent of Financial Institutions, basically the banking regulator in this country. So I'm just going to read from the Globe and Mail, if you'll just bear with me. The Office of the Superintendent of Financial Institutions has told lenders they will have to limit loans to borrowers with mortgages greater than 4.5 times their annual income. According to two sources familiar with the matter, the Globe and Mail is not identifying the sources. Banks will be allowed to exceed this new income ratio for some clients, the sources said, creating scope for relief for borrowers in expensive cities like Toronto and Vancouver. But the lenders will also be subject to overall caps on their mortgage loans that will limit the amount of discretion they can offer. The new rule will only apply to new mortgages, not to existing loans or to loans that come up for renewal, according to a summary of the measures reviewed by the Globe and Mail. What's your reaction to that?
I'm not surprised, to be honest. We were expecting something like this to happen. I think that, OFSI was saying that they were considering something like this for a while. I think part of the reason is that if we do see a situation where they roll back the stress test, they need to have another mechanism where they can, really justify the amount of mortgage dollars that each borrower gets. This is something very similar to what is going on in the U.S. right now. So this number of 4.5 times, a borrower's annual income is the maximum amount of mortgage, is another, facility for us to determine, what people can afford. Right now, we're really determining their affordability based on like a GDS, TDS numbers. And the 4.5 times may be another layer on top of that, and it may impact, how much people can borrow. The interesting thing is, OFSI was telling these financial institutions yesterday, and they have until, I think, Q1 of next year to put a plan in place. And every financial institution is going to have a different number on the cap of overages. So I think it'll determine, different lenders may still have different appetites, but also different lenders may have a different limit of that bucket of mortgages that will be over that 4.5 times number.
So is this something you think that borrowers should be concerned about, that they may be, shut out of the market? What are some of your concerns here, Clinton?
I think it certainly can be very challenging, especially in markets like Ontario and BC, where I think in some cases, it's 5 and 6 times annual income that people are able to borrow. Specifically, when the rates are very low, borrowers can take a bigger mortgage, Rob. The challenge is right now, borrowers can't even get to that 4.5 times number in many cases because the rates are higher. It's certainly, they're putting it in place to, really, I think, also combat the, real estate industry. They want to limit the amount of mortgage that borrowers can get. For me, we want to do what is going to protect the borrower. We also want to protect lenders and, the Canadian real estate market. But this is certainly going to be restrictive, specifically when the rates do start softening. It's not going to enable borrowers to borrow more than really they're able to borrow right now at these higher rates.
Okay, I want to ask you about something else. There's a lot of news to cover.
I know it's really stress test 2.0, Rob. I think that's the the interesting thing.
The Competition Bureau issued a report this week. It was out yesterday, and it was looking at a lack of competition, how that impacts affordability for customers when they interact with banks. And it's urging the federal government to drop the requirement for some borrowers to pass the mortgage stress test at renewal. What do you think about that?
I think that's very fair. I think if you already had the stress test and you're just looking to move from lender to lender, I don't think there should be a stress test. I can tell you right now, if you have an insured mortgage and you're moving to another lender, you don't need to requalify with the stress test. You need to requalify on your contract rate. The stress test was really important, Rob, when the rates were low. The stress test was protecting borrowers really from themselves and, putting a limit in place. And that's what's enabling the Canadian mortgage book, we'll call it. All these borrowers that are renewing into these much higher interest rates that really have been happening the last 18 months, I should say. These borrowers are in a better financial position now, and we know they can afford their mortgage because they had already gone through the stress test. We don't need the stress test today. Like, I'll go out there on a limb and say it could be eliminated, especially in this environment when the rates are high. We are forward thinking that the rates are going to be less. That's what economists are saying. They're saying that the rates are going to be less as soon as maybe June of this year. So right now, clients are already qualifying on a very high rate. And in some cases, with the stress test, we're qualifying borrowers on rates at 9 and 9.5%. That can be very restrictive, and I believe that is, limiting the amount of competition. There are borrowers we see every day that have no choice but to renew with their existing lender because they can't qualify on the stress test to be able to move their mortgage from institution to institution.
Okay. Thank you. You'll have a lot to talk about on Mortgage 101 the next time you do that show. So thank you so much.
We certainly will. And it'll be an hour, I'm sure, just talking about, what's going to happen here in the coming weeks and months.
Okay. Thank you so much, Clinton. Great to hear from you today and dealing with
Rob.
that breaking news for us. Yeah, Clinton Wilkins Mortgage Team, Centum Home Lenders, Dartmouth, Nova Scotia. I'm Rob Snow. This is Now You Know.